We've got a lot of earnings coming out, right? And let's put some of them up here. General Motors we had this morning, Coca-Cola had this morning. We have quite a few. What are we seeing thus far from earnings? I mean, I know that people, they're up a lot. Look at the red across that with General Motors, UPS, and Coca-Cola all down. How much of this is anticipation of trade problems?
A lot of it is the case. I mean, so we have, to put it in a cosmic battle, we've got this fantastic economy and amazing earnings. But the other end, we've got the PE pressure coming from, among other things, there's a longer list, trade, and you get that tug of war. So unless you beat by more than expected, it's really tough for your stock to make headway, and that's this trade-off in this Mexican hat dance.
So Bob, this is the puzzle that I have at least. It's basically a tension between earnings coming in quite strong as opposed to possible fears about trade. Most people that you talk to say, we don't think it's going to get that bad on trade. So there's a lot of bad news. What is that based on? Why do they not think it's going to get that bad? Because thus far it's been in one direction. It hasn't been good.
It's a hope and a prayer, in my view. I think, look, we don't know where this is going. Markets hate uncertainty, and we've got a lot of uncertainty out there. We don't know how and when this is going to get resolved, and it probably gets worse before it gets better. Just watch the president tweets every night.
Right, which brings me to estimates for 2019. I just remember that Caterpillar high watermark call in the first quarter, and if that's really going to be the conversation for most companies, if you take a look at this chart, it is by far my favorite of earnings season. So those orange bars are the earnings estimates for 2019, and the biggest ones are energy, materials, and industrials and technology. They have a lot of exposure to trade worries as well as the dollar versus the price change for those indices not living up to what the earnings should be. Do earnings estimates need to start coming down?
For next year, I think the answer is right, for the reason you said, as well as I think there are going to be some cost pressures around wage rates. So while I have no problems with earnings this year, they're brilliant. It's hard to find bad words for them. The question is, can we have a big encore next year? Consensus earnings up 10-ish% next year? I'm not sure. I think we're going to have trouble making the margin improvement necessary to get those numbers, and therefore we're going to have some earnings disappointments. That's probably premature to talk about because the numbers are so strong.
Right, so that's not priced in yet.
I don't think so.
But then you can see with GM, right? They just mentioned what's going to happen, David, with the with their input costs with tariffs when we knew they were going to have problems with input costs, and that stock down 4%.
Exactly right. Exactly right.
So given that, is the market properly valuing equities right now? And that's to say, what happens to the price equity ratio? Is it too high still? It's come down. Is it still too high?
For the remainder of the cycle, it will keep coming down. We saw the peak, in my view, in January. That was the peak for PEs. Now you've got this race between advancing earnings and pressure on PEs, and earnings are modestly winning the war so far, but that's going to be a dance we play till the end of the cycle.
So is this a defensive call? Or do you need to start thinking defensive?
No, I think you just be cognizant of prices. Look, we've had this nice run to 2,800 yet again. It's like the fourth time we've run to 2,800, and each time we've found a reason to move back. I don't think we're punching through to new highs here, so toward the high end of the trading range, I get a little more cautious.